So I'll just do a quick introduction to try to frame this conversation, which is a sort of challenge, I think we can all agree, because it's so vast. But each of you sort of focuses on a sort of distinct area of a complex equation that is before us, areas that have always been intertwined, but are more and more coming really into complete convergence and into confluence. We talk about fiscal, industrial, defense, trade policy, but increasingly this is also including monetary policies coming under sort of very strong and structured political control, particularly in the United States. And I think the biggest problem that we have is we know something enormous is happening, and we know that it's not done happening quite yet, and that's the moment that we're in right now. And out of all the sort of three major blocks economically, traditionally, China, the United States, and Europe, it seems to me that Europe is probably the most exposed to the sort of downside, to the reordering that is happening right now. So this is the sort of big challenge before policymakers. So maybe we'll start with one of our policymakers here, Valdis Dombrovskis, the commissioner here from the European Union. So I'd like, if we could just start for you to sort of situate kind of where we are in the continent of Europe in this moment. I mean, we just had in the last 24 hours Donald Trump saying that he's going to raise another 100% tariffs on China. Will this trade war ever end?
Well, good morning, everyone, and it's a pleasure to be back at Riga conference. Well, and indeed, as you rightly noted, geopolitics is changing. The world is becoming more fragmented, more conflictual, and as European Union, we must find our place in this new geopolitical world, and must make sure that we remain a strong player there. So, therefore, if you look at the two overarching priorities for this political cycle in the European Union, it is strengthening our security and defense, and it's strengthening the competitiveness of European economy. And so we are delivering on both of those work strands. So your question was probably more related to this second part on the competitiveness. So one of the first initiatives of the new European Commission once we took office was so-called competitiveness compass, where we outlined many different elements which we need to do to actually strengthen the competitiveness of European economy and address the factors which lead to the slower productivity growth than we see in other major economies. And obviously, one of the questions is also how the trade policy fits into this picture, and we see that indeed there is, to put mildly, high uncertainty surrounding the trade and including trade policies of President Trump administration. So how we are responding to this? On one hand, we are clear that we want to maintain, to the extent possible, rules-based multilateral trading order, and we believe that at the end of the day it's better for everyone. But also we are working actively to diversify our trade relationships. So just over the last year we have concluded trade agreements with Mercosur, with Mexico, with Switzerland, now most recently with Indonesia. We continue negotiations with India, Thailand, United Arab Emirates, amongst others. So so our message as regards trade policy is that we remain open for cooperation, we remain open for trade, and we see diversification as part of the resilience of our economy.
So there's a lot to unpack there, and I think we'll come back to actually the execution portion of many of the things that you've outlined right there. But I'd like to go next to the governor on the ECB Governing Council as well. I'd like to get an idea from you of how your job has changed over the last 12 months and how you think about the world. Monetary policy and these sort of sober, politically agnostic central bank governors who, with a single focus of price stability, that is being challenged across the world. And I'd also like to get an idea from you. Are there also ideas, orthodoxies about economics that we are now having to revisit as sort of fundamentally true, namely particularly on the tariff question?
Yes, good morning everybody, thanks for having me. I think answering these questions we can go on for the rest of the weekend. So let me just touch a couple of issues here. How has the central bank business, if I may say so, has changed. I think one is the issue of institutions. We have been living for quite a while, not that long, 20, 30 years, with the thinking of the independence of central bank. Okay, we've been living with the interpretation that data is actually data. That's a fact. Okay, now it's not anymore the case. So not that much in Europe, but we take a look at the US, and of course we see that the independence of the central bank is not given. It's discussed. There are attempts to reduce the political independence and of the central bank, and that of course does affect the efficiency of monetary policy. One of the things that we've seen in the past, I would even perhaps call it horse whispering inflation. Inflation was extremely high, and then it was pushed down at a relatively low cost on employment. In economist language, we call it sacrifice ratio. You hike the rates to push inflation down, and it typically spills over into high unemployment and kind of recessionary type of story. We haven't seen anything of that, and we've seen that an important part of it is the strength of institutions, the independence of it, the credibility of it. At the end of the day, we need to hike rates less to reduce inflation and therefore do less damage to the economy. So it's been very helpful. Now, if this is put up for discussion and credibility is not that strong anymore, it means most likely that inflation is going to be somewhat higher, again hitting the lowest income strata much more in the society. Point two, for us to deliver on our mandate, we will potentially need to be more destructive towards the economy, which again would hit much more the less wealthy parts of the society. So this, I think, is one element in terms of the way how you can deliver on your mandate. And I don't think that the news are good so far. Point two, in terms of the trade wars, trade sanctions, or whatever we may bring into the equation, I would say we've been quite wrong on this. If you take a look at the forecast that we kind of put out in December last year from the ECB in terms of the thinking along the traditional models, we expected the euro to get weaker. Okay, the opposite has happened. We expected inflation to go up much quicker. Nothing much has happened. So the interplay with politics, with political decisions and policymakers is challenging the existing understanding of the economy. So let me just conclude with two things. Why were we wrong? In terms of the exchange rate, nobody expected that the U.S. will become that unpredictable and the uncertainty is going to be that high. Okay? And it changed the understanding of some elements of the reserve currency. And in terms of inflation, we saw that there was no retaliation. Okay? So typically in the past we would have seen tit for tat. Now we didn't see that. Was it good news? To some extent, yes. It was less painful to the economy. But of course, the question then going forward is, how will we act when further shocks come?
Because part of what you're describing is the fact that there was no retaliation is in part the exposing of some of the sort of impotence that the European continent has on the global stage under what has really been unmasked by the Trump administration.
Yeah, we're stuck to playing defensive game rather than playing offense, and I think we need to play offense.
And that takes us to another sort of plank of what Donald Trump is doing, which is also playing with the question of trade, and this thing you've written a lot about, which is state capitalism. And you recently put a paper out saying that the sort of quiet move towards state capitalism, I'm not sure how quiet it is anymore, but every couple weeks now we're seeing the Trump administration actively taking stakes into companies. I'd like you to sort of bring your view of what that actually means and how it's going to affect, other blocs that are competing with the United States, say Europe.
Yeah, so in my work I focus a lot on the defensive and offensive toolkit, which underpins economic security, and since 2020 we have seen a lot of retweaking, reimagining of the tools, and some of them are more creative, some of them are less, and tariffs definitely now fall into this toolbox, which we have to counter in when we think about economic security. We've seen proliferation of tariffs as a substitution for secondary sanctions, for export controls, and before the Trump administration, we seem to have some strategy how to deal with economic security. We had 3 pillars: promote, partner, and protect. It's still there. But I think the traction of de-risking strategy is being offset by tariffs, the reciprocal tariffs. And what the Trump administration in doing, how the approach to economic statecraft has changed in particular, and somewhat mimics, because in my work I focus a lot on Russia, some of the elements, pages from Russian or Chinese playbook is just quite astounding to see, where you see much deeper penetration into corporate America, where you see the models like building national champions, who we see with Intel, for example, where now other companies are asked to chip in to support and to promote this semiconductor companies, but also much more transactional approach to export controls, as we've seen recently, where it was unthinkable just a couple of months ago that export controls can be in exchange for some revenues, and that sort of undermines the sheer notion of the first Trump administration said that economic security is national security, which raises the question, at what point things are not strategic anymore? What is negotiable? And that puts the uncomfortable question on the Chinese side, at what price this can be negotiable? And this goes beyond export control to investment screening. CFIUS so far has worked more or less fine, maybe barring the Nippon Steel, but there are now more concerns towards where he can get something in exchange for $1 billion, for example.
And Ed, I'll go to you to kind of tie all of this sort of together, because you sit in the belly of the beast in Washington, D.C. What have we learned? Because I think part of the problem that the adversaries, or I should say the counterparts of the United States have, is that the strategy has got all these tools that we've never really used in the same way before, and they're not being used in a way that is predictable or necessarily assigned to a particular ideological or principled approach. When we think about foreign policy, trade policy, all of these things together, what is your understanding now, which maybe will evolve, of what the sort of Trump doctrine is? And that will be key, obviously, for how, for example, the commissioner will have to respond to it.
Trump doctrine. So, I mean, remember, in the build-up to Trump 2.0, we've had a pretty gradual fraying, degeneration of the global trading system, or the multilateral system. The WTO has essentially been semi-defunct now, without a quorum, because of successive Democratic and Republican administrations. Trump 2.0, of course, is a complete metastasizing of this phenomenon. As you mentioned, economic security is national security in Trump's view. That I guess is one way of expressing the Trump doctrine. So you get 232 measures, which is national security for things like kitchenware. It's like, okay, that's a national security issue. You get trade wars launched on the basis of leverage for fentanyl imports, mostly fictional fentanyl imports. Canada, for example, Trump's declaration of the economic war came long before Liberation Day on April the 2nd. It began in January on Canada and Mexico before he was even inaugurated, on the basis of fentanyl coming across the border. The sort of bottom line here is there are no rules. The rules are, and the doctrine is what Trump says it is, and we are reacting to it. Therefore it's, by its very nature, unpredictable. And so what I expect to see is as China reacts, China, of course, is, departed from a multilateral system as well. It is in its own way saying we have our rules, this will be our sphere, you can sign up with us. And then Trump has his. What it leaves the rest of the world to do is, I think, get plurilateral coalitions of the willing, ad hoc groups, whilst trying to get the least worst deal out of the United States to buy some kind of short-term peace in order to create room to do longer-term insurance, hedging, new market-finding operations. The Commissioner mentioned the EU's got these deals with Mercosur, with India. Pretty impossible to imagine a couple of years ago India being a potential likely deal with the EU. But Trump has changed that. India is now very keen for deals. So I think you're going to see the rest of the world, in the absence of a rules-based global system, create their own ad hoc arrangements to cope with Trump. The analogy I use with Trump is you bring fruits to the volcano. You pacify the volcano. And that will hopefully buy you time, buy enough goodwill with him to give you space to do more serious, enduring, long-term, sort of contractually binding deals with other people.
Right.
It's a very ad hoc, variegated, messy, volatile picture.
I'm not sure I've heard that idiom before, but I don't know how effective that would be just in my imagining of what that would look like, putting fruit into a volcano. But I'd like to take it to the Commissioner now and thinking about, because it's also forcing Europe to behave in a way that it has not traditionally wanted to and does not want to, namely on, say, its own trade barriers. And now the Commission has put forward a proposal to raise steel barriers to preserve its own industry. And I wonder in what other areas you are concerned and what other areas you may have to see more of that in order to safeguard European industry in what is indisputably a much more hostile global environment.
First of all, I would come back to what I said in the introduction, that we see our openness to global trade as our strength. We are a trading superpower, so certainly our intention is not to close to the world. At the same time, yes, we see that the global trading landscape is becoming more complicated, so we also need to think about level playing field issues, about economic security issues, and that's what we are doing, but it's always important to keep in mind the basic premise that we should not become protectionist. So then you mentioned specifically our measures in a steel market, which European Commission announced this week. This is something which has a long prehistory. So we had been struggling with the issue of global steel overcapacity for many years now. For many years we had been applying so-called steel safeguard and number of other trade protection measures in area of steel. But what we are also noting that our trade defense instruments are not really well prepared to deal with the situation where there is no some kind of market shocks or something like this, but where there is a problem of this systematic steel overcapacity coming primarily from China. And we had still have a global forum on steel overcapacity to discuss those issues, but not that it has generated many practical solutions. And that's why we are now, as our steel safeguard is expiring, taking this new measure in place to continue to protect our steel market against what we see as unfair competition coming from, so to say, state-led industrial policies created overcapacity. There are some other sectors, notably, as you know, we had anti-subsidy investigation concerning the battery electrical vehicles on China, and we have put our tariffs against China's battery electrical vehicles. There are other sectors where we have concerns, where we do apply trade protection measures. There are also issues where we have economic security concerns, so where we are applying export controls or developing new mechanisms, so developing our approach on foreign direct investment screening, also looking how to approach the question on outbound investments. So clearly in this more fragmented world, that is something which we need to do, but it's always important to keep it proportionate to the challenges which we are facing, so without undermining from our side this global trading order, which actually by and large serves the EU good.
But just to follow up on that, you're talking about these unfair practices. Isn't that becoming more the rule than the exception? Isn't that kind of structurally what we're seeing happening in the world, moving more towards these as sort of standardized practices, and that, at a certain point, the desire to preserve the multilateral system and its preservation are not the same thing. So in that context, do you think that the Europeans will have to step up their own efforts in order to, not show up to a gunfight with a knife, let's say?
As I was saying, we are prepared to step up our own efforts, and that's what we are doing where the situation requires so. That we see actually proliferation of trade barriers. That's a tendency we see already for a number of years, so it's not something which is specific only for this year. For this year, indeed, we have just much higher trade uncertainty, and probably this will all trigger yet more trade barriers. So while, that's why I'm saying, protecting to the extent possible international multilateral rules-based trading order, because we are not blind, we see what is happening. And that's why there's so much focus right now on developing our network of bilateral trade agreements, also to have a diversification through those bilateral trade agreements, and with all those trade agreements, a substantial majority of our trade will be taking place actually under the rules of the bilateral trade agreements.
And Governor Kazaks, it seems that one of the effective checks to Trump has been the bond market, one of the very few. In your mind, the market has received all of this fairly serenely, almost exuberantly, as we've seen over the last couple of months. Where in your mind do you think the red lines are for the market in terms, is it central bank independence? Is that still, or is that kind of a quaint idea?
I wanted to continue on what Valdis was saying, but anyway, okay, I'll try to come back to this, because there are a couple of very interesting, I think, things that we can build on as well. To strengthen the European case. But in terms of the bond markets, yes, we very clearly saw that in terms of checks and balances, the cost of funding the debt is an important element. And that is very natural, that comes out of transactional approach. If it becomes too expensive, then you are forced to move on to deal with this. Institutions don't matter, it seems, that much if they don't affect the cost of financing. So that element seems to be there. Okay? And of course, as well, moving against the independence of the central bank, if it increases the uncertainty and increases the long end of the yield curve, of course, it kind of pulls it back in terms of the courage. How far can you go? How quickly? But the pressure is still there. But I think coming back to the European case, of course, we are exporters. We are a very open, big economy, and rules of the game are extremely important to us. Unfortunately, there's one conclusion most likely is that given this transactional approach, there's never going to be an end to the trade war, or never going to be an end to revising and revisions of tariffs. Because there is a mentality of a wolf pack, as soon as you smell blood, you go after it. And that is very traditional in financial markets as well. When you find out who is the weak one, you keep attacking. Okay? And that in a way also shows what has been the response of the rest of the world. And at a time when we are weak, we cannot defend ourselves sufficiently. So building alliances is a good storyline that we need to continue. Mm-hmm. But we are not only seeing the fragmentation of the global order from multilateral to multipolar, but we also have realized very much how fragmented are we within Europe. We have built hedges, fences, and we try to defend those national interests more than seeing that acting together we can become much stronger. We can be much more independent drivers of our decision making and our might within the global economy. And let me give you just one number. My ECB colleagues have estimated that to compensate for the potentially lost trade with the US due to the war of tariffs, we only need to increase our intra-European trade by 2%, not 2.0, just 2%, which is a very small number. So single market, both in goods and services, can reinforce our economy much more stronger and therefore also build a much stronger case for being not the weak ones, but the strong ones.
And I want to get into the sort of European response and kind of the sort of reforms within Europe, but first I want to go to Ed for just another sort of perspective again from DC. And looking at all of these countries that are playing one side, two sides, three sides, four sides, this seems to be a very effective strategy right now. Do you think that that remains an effective strategy, or does there come a point where one needs to choose and the Trump administration won't really tolerate playing both, say, China and the United States?
I just want to pick up on the previous two remarks. I mean, if Europe is really serious about adapting to this world, then the Mario Draghi report is there. What needs to be done is pretty evident.
Yeah.
And, you know, this isn't a problem created by Trump.
Sure.
This isn't. These are internal problems that are fixable.
Yeah.
That there doesn't take any great genius to see how you improve the workings of the single market. There's a lot of low-hanging fruit there. How you create deep liquid pools of capital to have the kinds of scale of investments we're seeing with the AI gold rush in the United States. But your question was more about
no, but let's stay on that. We
yeah.
can stay on that for a while because I think it's a key question, and I think that, and we'll come back to the China question, and maybe Maria, you can weigh in on this. I think that precisely to your point and to all the points here, I think that there is this sort of strange thing that happens around the Draghi report where everyone agrees with the diagnosis, everyone agrees with the solution, and yet implementing it is the very large problem. And I think, and this is what I've begun to call the Draghi paradox, right? Because on the one hand, the answer is more Europe, right? And then on the other hand, you have Germany, you have France, you have the Netherlands, everywhere rising nationalism that is not going to accept a less sovereign individual nation relinquishing some of that power, but the necessity is there, otherwise you cannot compete with the United States, you cannot compete with China. So, I mean, for whoever wants to pick that up, Maria, I don't know if you have a reflection on that. How do you, in a moment when everyone seems to agree you need more Europe, and yet at the domestic level that seems politically impossible?
Well, I think Europe faces a triple challenge. So other countries are also tackling the inherent trade-offs. How do you balance openness, competitiveness, growth, yet security, and then sustainability comes on top, and sometimes is the last element. Japan, South Korea, other countries also, having their strategies how to deal with that and have a good framework in terms of how to combine this partner, promote, and protect elements. But I think in the European context, because of multi-nested game, you have issues between European Commission and national governments, between member states, that there is a lack of, trust between member states, and then member states and industry. So let's not forget that industry is a key actor in the execution of any economic security or the risking strategy. So Europe has a lot of homework to do, and I agree that Draghi report is a very good starting point. I think there is only 10% of that has been implemented since it has. Good. So we need, again, in this existential fight, if it feels existential, agility, speed, and scalability is really key, but that doesn't seem
to. And Ed, just to pick back up from the U.S. perspective, if, let's say, you were able to get these reforms through, you were to be able to get a Europe that acts more like a single nation rather than a collection of nations, how much does that change the equation in dealing with Donald Trump?
I think it gives Europe more confidence to, carve its own path. But this isn't a criticism of the recent deal. I understand why, escalation tit for tat isn't really in anybody's interests, and pacifying Trump for however long this deal sticks. Nobody can rely on the durability of any deal with Trump. So that's why the word transactional is kind of wrong. Transactions where there are two parties and there's a contract, and the contract is enforceable. Trump is not really transactional by that definition, because these contracts aren't enforceable. They can be changed at any moment. And you remember this second phase of Trump trade war began with the NAFTA 2.0, with Azmaka, which he, in his first term, insisted on renegotiating, and then at the beginning of his second term said, this is a horrible deal. Let's scrap it. I mean, the horrible deal was the deal he asked for. So you're going to have to sort of think that this isn't an aberration. This is we've had 9 months of Trump. That's about a fifth of what we're going to go through. So this is going to be a permanent, rolling, chaotic normal, in which the longer it goes on, the more the really big, serious alternative entities like the EU are going to have to dig much deeper into thinking, how are we going to carve out a new world in which we thrive in it? And I think buying peace is a good first step, but it's only a first step. There's got to be a lot of other steps, and there's got to be a much deeper philosophical rethinking of how you shape a world you want, because otherwise we're all just reacting to this volcano which may or may not erupt.
And I think that this philosophical rethinking is, I think, on a scale particularly for Europe, that makes it very difficult to speak openly politically about what we're talking about. What we're talking about is in some ways a more federated Europe. We're talking about something that acts more like a single country. And I'll go to the Commissioner now, because this is, in some ways part of your project, trying to figure out how to unlock good Europe without bad Europe, right? And so the Commission is undertaking now parts of what I think we can call bad Europe: too much regulation, too much confusion, too many barriers that exist. So how do you unlock the good Europe, and critically, how do you sell it to the domestic audience?
Yes, indeed. So some of you already mentioned Draghi report, and there seems to be a consensus that that's what we need to work on. And I was mentioning in my introductory remarks European Commission's competitiveness compass. And that's our strategy, which I would say draws quite heavily from Draghi report. So, and by implementing the competitiveness compass, we are also implementing the Draghi report and actually addressing a number of structural shortcomings in our economy. And just to highlight one issue which we see is innovation gap. We are just relative to our economy spending less on research and innovations than US or China does. Another issue, practical issue, we do have higher energy prices in Europe than in US and China again, and that is undermining our industrial competitiveness. Administrative burden, indeed, an issue, and that's why I'm also tasking the European Commission to lead our simplification agenda and the reduction of administrative burden, and we set the goal of reducing the administrative burden by 25% by the end of this Commission's mandate, and had already come with 6 legislative proposals, so-called omnibus proposals to implement this, and there are many more in a pipeline, so this simplification agenda is very much on. And then you mentioned another point, that the EU is stronger when it speaks with one voice, and that goes without saying. And in some areas it's already the case. For example, we discuss a lot international trade. International trade is a EU exclusive competence. We already are speaking with one voice in the area of international trade. And indeed, President Trump administration initially was trying to negotiate trade with individual member states, but pretty soon they also came to the conclusion that it does not work this way, that they need to negotiate trade with European Commission, which negotiates on behalf of the member states, and by now it's accepted. Well, more far-reaching, of course we know that there are areas which are decided in the European Union by the principle of unanimity, and in a number of areas it holds back decision-making. It's most visible right now in the area of sanctions, where it's difficult to agree new sanctions packages, like the discussions on 19th sanctions package are still ongoing. It's difficult to roll over existing sanctions, but not that there is a very easy way out of this question, because the European Union's working methods are enshrined in the European Union's treaty, and the treaty you can only change by unanimity. So,
another paradox. Yeah. And just quickly on just one point that you bring, the simplification agenda. Why are we so afraid in Europe to call something deregulation? Why is that such a bad word in Europe?
Well, views vary, and indeed there are people who would say we need deregulation, and there are people which are having none of it. Okay, how we distinguish between simplification and deregulation? So what we are saying with the simplification is that we want to do things in a simpler and less costly way, without actually abolishing our high social or environmental standards, or the fundamentals of our social market economy. In a sense, social contract in Europe is different than in many other places. But also that agenda is very controversial, especially there is broadly speaking, the situation is better among member states which are moving forward on the simplification agenda. In European Parliament it's very complicated. So to simply put groups to the right say yes, we need simplification and we need more of it, and if not deregulation, and groups to the left saying no, don't you touch this, don't you touch that, it's watering down our standards, and so it's not easy to find this compromise. For example, just very recently we put forward the proposal on the first simplification proposal covering sustainability reporting, sustainability due diligence, taxonomy, and so. Very difficult file in European Parliament, and just recently there was, with great difficulty, some kind of a political agreement reached among pro-European political groups in European Parliament on the way forward, because the views are quite split on political spectrum on this.
And Governor, I'd like to come to you, because one place where in Europe it does speak with one voice is the on monetary policy, on the European Union, on the ECB, and of course that is, I think, when you look at the history books, one of the great triumphs of unified European power was the whatever it takes, right? This sort of concept. And so if you could indulge me here just for a moment to imagine a world in which you had a euro crisis today, where you have where you have what's going on across the world in the United States, in China, but at the same time this rising sort of nationalism. Would whatever it takes work right now? Is it the kind of catalyst that would be required to bring together the kind of Europe we're talking here, or actually is there the potential, if that were to happen now, to kind of blow things apart?
We are in the premises of the University of Latvia now, so let me bring one analogy here. Is that, yes, unfortunately Europe has a trick that it seems that it needs to fail the exam first before it studies for the exam. I think this is a wrong strategy. Okay, this is a painful strategy. Let's first study, pass the exam, with flying colors. But I don't think that anything has changed in terms of monetary policy delivering on its mandate and doing the job when necessary. So don't you worry about that. The ECB will do whatever is necessary. But what we see in this global context is that it might not be sufficient. And here the structural weaknesses are critically to be fixed. But I would be quite optimistic on Europe, for the same reason that Edward mentioned, and Valdis as well, we have the Draghi report. We have a latest report. So we know what we need to do. Yeah. The only question is to do it. And it's not easy. We would be in a much more difficult situation if we would not know what to do. Okay, so let's weigh the perspectives. Simply gear it up. In terms of this same simplification, I think simplification is a no-brainer, because I would define it in a way that you still deliver the result, but in a simpler way, with less resources. Deregulation is case-specific, so it's less general. Yeah. But there are elements where we clearly need deregulation as well. And we kind of, in different sectors are working on that. But let me come back to this issue in terms of, I think it's the Finnish president, Stubb, very nicely kind of put it across in his UN speech, saying that by and large diplomacy is about values, interests and power. And he was saying that coming from a small country, Finland, it does not have enough of the power. Latvia is in a similar situation. But we are part of European Union. So we should ourselves appreciate that we are much bigger than that. And we need to build this power by kind of destroying these fences that are fragmenting ourselves. And the Draghi report does it for the economy. There must be other kind of reports that does it for other areas of our society. But the blueprint for what needs to be done is straightforward.
And Maria, I'll try to end on something slightly more optimistic, to try to get a sort of optimistic case, you think, of the kind of opportunity that's here before Europe. I mean, we've touched on some of it. Where do you see that?
I think just to follow up on the position of small countries and what they can do. I come from Ukraine, not necessarily a small country, but agency of small and middle-sized countries still matter, and I think Baltic states, Finland have done remarkably in terms of teaching how to achieve economic resilience, economic security, by gearing up sort of national measures first. And this is obviously, they're much more open economy and would be much more vulnerable, but there have been unprecedented, changes at the national level that put them in a much better position if you look at how quickly Baltic states have phased out Russian gas and switched to LNG, about critical infrastructure, the shadow fleet, the sort of monitoring of that. The national measures in terms of sanctions has still been implemented. So whatever happens at the EU level, there are measures to react to that at the national. So there have been a lot of changes where smaller countries can teach, and I'm sure Latvia has been, passing that sort of lessons learned to other countries, what can be done there. But following up sort of on your questions in particular, so it's one thing to focus on the protect side, but I think the ultimate strategy is to focus on the not just promote but understanding your strategic indispensability in the global supply chain. Again, something that Japan is strongly focuses in its economic security strategy, and that brings us to this coalition of the willing. How do we partner with like-minded countries? How do we recreate burden sharing without the multilateral institutions and risk sharing where, like-minded countries can achieve and don't compete for the same goal.
And Ed, just coming to you, and I'd like to come back to just this question of China, just broadly speaking, where you see the kind of the tenor of that conversation between the United States going, where you see it evolving. And I think this was a hope from the very beginning from the Europeans that actually this is something that the United States and Europe could actually get along on and could potentially have a united approach on. That has obviously not really been the case. Is there an opportunity in there for the United States and Europe to speak with the same voice?
On China?
Yes.
There is an opportunity in theory, on paper. In practice, I find it very hard to imagine how because for two of the three biggest markets, the US and the EU, to cooperate in trying to constrain and curb the other big market, requires such extraordinary sustained strategizing
and trust
and dialogue and trust that I've answered my question. No, it's not going to happen. I think that the game here is we're getting into. We've gone up and down with China. We're now on a real down with the 100% threat.
Yep.
The possibility that Trump won't actually meet Xi Jinping at the APEC summit in Korea at the end of this month. I suspect that's sort of brinksmanship, and we've seen it before. It's a roller coaster. But what China is teaching the world, I guess, is that leverage does work. It can produce short-term eruptions, but ultimately it brings Trump back to the negotiating table. And Trump's awareness of China's stranglehold on between 75 and 90% of the world's critical minerals and rare earths is an extremely important, arguably the most important revelation of this whole year. Since Liberation Day is the China leverage.
I think even he was surprised by it.
Even he was surprised by it. And so a colleague of mine coined the phrase "Trump always chickens out" taco. Generally, he's not chickened out, so it's not fair to apply that across the board. But he has with two elements. One is China, and the other is the bond markets. And we saw the stock market yesterday drop 2.5%. What happens with the bond markets if this 100% tariff threat, if this sort of full-scale decoupling risk starts escalating, the bond markets are going to respond. And then we'll see what Trump does.
And I want to open it up to the audience next just to prepare yourselves, but I just want to close with Commissioner there. We were talking a little bit about kind of the leverage that each of the blocs has. In your mind, what is Europe's leverage? Is it just that large single market, or is it somewhere else?
Obviously, our single market is our largest economic asset, with 450 million consumers, with 26 million companies. We are obviously a strong player, and we need to leverage. Also, what we see in a current, more unpredictable world, that also the stability, the respect for the rule of law, the predictability, strong institutions, it also all counts for something. We see elevated interest, for example, in euro-denominated assets. Question is how we build on this. But it's also clear that in this more conflictual geopolitical situation, Europe has to become more of a hard power, which we have not been so far, because area of defense has never been, EU area. EU was kind of started as a peace project, not to allow the war on European continent again. Unfortunately, war on European continent is reality again, so we have to reconsider this. And we have moved, I would say, very strongly into this area of security and defense, and that's something which we need to obviously continue. So when I was starting saying that two main priorities for the EU is competitiveness of our economy and security and defense, those are the areas we need to continue to focus on to be a player on this global stage.
I think with that, I'll open it up to the stage here, and just to so the organizers don't get too concerned, I'm aware of the time. I'm going to steal maybe an extra 5 minutes because we came a little late. To the minister in the front there.
A quick question to Edward Luce, who earlier this week also did Isaiah Berlin lecture on Zbigniew Brzezinski. Looking back in the past, which period you would compare us today to?
Thank you for that easy question, Minister. And it was an enormous pleasure, by the way, to give that lecture. So thank you very much for inviting me. So the more ominous analogies that we hear from historians and from political scientists, historic analogies, are pre-1914, and that's the US-China situation, Germany, Britain. And in terms of what we're facing domestically with populism, both from the right and the left, the 1930s. So, if you're feeling particularly suicidal, you can sort of blend pre-1914 with the 1930s and see what comes up. And I think the great advantage of having these analogies and being familiar with them and studying them is that we know what to avoid. We know history does provide a signpost as to where not to go. And we've been talking about the EU. Well, the EU is sort of creation in response to that, to try and prevent a recurrence of that. I don't think most of us study history, and I think there are one or two sort of very prominent world leaders who you could argue are not deeply knowledgeable about history. And so others, it's incumbent upon others to, I think, bear these lessons very, very prominently at the forefront of the debate and of their minds.
I'll add to that, just if you want to ramp up the depression pre-World War I, pre-World War II, with a destructive power of 2025, which is basically unlimited. To the gentleman there.
Gat Seglits, ex-Minister of Social Labor Affairs here in Latvia. And the question is about France. How worried are you what's happening there? It's the second biggest economy, 7% of GDP, debt deficit basically ungovernable, as we see now. And why is it affecting us? Of course, it's the borrowing costs. To get to 5% of GDP, we are borrowing a lot. We don't have savings. So our state debt, budget deficits for the next 3, 4, 5 years are going up. Debt servicing costs are going up. And of course, if anything happens in France, we will feel it. Thank you.
Who would like to take that one?
I can take that one.
Yeah.
Indeed. So if we look at the situation in France, obviously the questions of fiscal stability are important, and France needs to do quite sizable fiscal adjustment to be in line with a medium-term fiscal structural plan next year. So this year, France appears to be on track. And what is happening right now is that, in a sense, the process of formation of the government is in parallel with the process of formation of the budget, because in a sense budget was a stumbling block for the previous two governments, so it's important that once you put a government in place you also put a budget in place. So I just day before yesterday had a conversations with a new French Minister of Economy to discuss all of those issues. So the budgetary preparations are on track, and we hope that the budget which is going to be presented is going to be broadly in line with the requirements of the medium-term fiscal structural plan.
The gentleman, center there, 4 rows back.
Thank you very much for an excellent discussion. My name is Jakob Ström from the Ministry for Foreign Affairs in Stockholm, Sweden. You've touched on a number of problems and challenges. You mentioned the euro crisis. We've talked about the tariffs. There are some who say that deregulation of the financial market in the US is threatening the stability of the American economy. Obviously, it's not only France, but other economies as well that are very indebted. There are numerous problems in the global economy, and if any of these bubbles, like the AI investment bubbles, burst, what do you envisage, and what are the risks of a financial crisis globally? It seems to me we're balancing on a pretty slim edge.
Maybe Governor Kazaks, since that'll be your problem first, I guess.
I would approach this from a structural perspective. Bubbles come and go, bigger and smaller. They will always happen. But then what is the outcome, and what's the way we deal with that? And let me bring you back to the bubble of late 1990s, early 2000s. There was a massive bubble that burst and had economic implications. But it also led to structural changes in the economy. And to a large extent, this digitalization revolution was much better used in the US than in Europe. So Europe missed out on part of that. Be my guest, just imagine what will happen with European productivity and growth and its geopolitical reach and standing if we miss out on the revolution of artificial intelligence. Okay? Of course, we have to be considerate of what happens with the technological development, and we need to invest. It will come with some kind of frothiness in the markets. And the run that we've seen so far in the financial markets has been quite a run. It has been quite a steep climb. Who knows what will happen exactly going forward? We have lots of safety checks in Europe that are operational. And of course it's not a very good example because it's a different one. But take a look at what happened with Silicon Valley Bank in the US. Nothing like that happened in Europe. We have much more robust system than it was prior to the global financial crisis. But this architecture is not complete yet. Okay, we still do not have EDIS being finished, banking union. Okay, we do not have effective and efficient enough savings and investments union. So, of course, I would be worried if something breaks. But unfortunately, it is also part of the deal. We have to be quick to resolve those issues. So if you're afraid of wolves, don't go into the forest. But we need to go into the forest. Okay, so sorry for that. Life is what it is. Let's be realistic.
Well, I'm hesitant to end on that note, but I'm conscious that everybody here has...
But we are following, of course, closely to that. But non-linearities in financial markets is a risk.
Yeah.
If I may just add a few words on this. We are previously discussing simplification and why not deregulation. And we hear some voices, especially in US, saying, okay, probably we need to deregulate the financial sector to allow for faster growth and so. And that is one area where in the EU we are saying exactly that we do not have intention to deregulate, that the financial sector regulatory and supervisory framework was set up in EU at the EU level following the global financial and economical crisis. So it's set up there for a reason, and by and large it serves us good in all the previous economic shocks which we had, starting with COVID-19 pandemics and energy crisis following Russia's invasion in Ukraine and so. Actually, our banking sector and financial sector served us well. It was part of solution, not part of the problem. Obviously, there are things which we need to simplify and streamline, but that just shows that sometimes you have those regulations there for a good reason, and exactly now where indeed analysts are increasingly saying that maybe some financial risks are on the rise, it's important to have this robust system.
Well, on that note, I think if we could all join me in thanking our panel, Maria Shagina, Edward Luce, Valdis Dombrovskis, and Martin Kazaks. Thank you very much. Thank you.